Good morning. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet D'Souza.
Good morning, Navneet. I'm Agam Vakil, the top headlines. It's a positive start to the June series with the Nifty hovering around 10,750. Tech and metal players lead the up move while PSU banks drag India week's advances. And open interest surges in V-Guard and Just Dial as investors take fresh positions in their respective futures. ICICI Bank official says Chanda Kochar is currently on an annual leave. The bank is not aware of the duration. And it has been a merry May for Bajaj Auto and Escorts as both report healthy sales numbers for the last month.
Okay, those are the top headlines at this hour. Let's also take a look as to what's happening in the futures and options market on day one of the June series. Remember, both your frontline indices, Nifty as well as Bank Nifty, started the series. The futures have started the series with a discount. So a little bit of if you look at the discount, that's narrowed from 34 points to currently 20 points for Nifty futures. Pull up the Bank Nifty futures as well. The discount was almost over 200 points towards the close yesterday on back of that short covering rally that one saw. Right now, the discount is nearly 100 to 120 points. I want to pull up the Nifty Metals Index. If you could just pull up that chart. Remember, there was that fear that there could be selling pressure owing to last night's news of reigniting trade fears coming in from the Donald Trump administration. But it opened 0.5% lower, and look at the gains now. It's one of the top sectoral gainers currently as we speak. The India VIX on day one has once again started on a positive note, so that's sitting with gains of nearly 2%, almost 2%. 13.5 is the level where India VIX is currently trading. Let's tell you about the option strikes which are active in today's trading session. For the June series, if you look at the maximum OI concentration, it is at the 11,000 call strike and also at the 10,600 put strike. So that's giving you just a range to start off with for the June series. And in terms of open interest additions so far in today's trading session, we've seen strikes like 10,900 as well as the 11,000 call strike, where open interest addition has been seen between 4 to 2 lakh shares. On the put side, however, rioting has been witnessed for the 10,700 put strike, where premium is somewhere about 130 rupees, and the 10,600 put strike is too active in trade. Remember, this strike was active in the last few days for of the May series as well. So watch out. Maybe that's the support, and that's where the maximum open interest too is sitting. Let's just tell you how the FI setup is looking for the June series. So they've started this series being net short on index futures. As you can see, they're 56% short on index futures, and pull up the index options data. That'll show you they've bought more of puts for the series. That's 64%, and they've also written more of puts. The other plate will just come up on your screen. They've written nearly 58% if you look at the total exposure in that segment. So FIs, Agam, they've been selling very consistently in the cash segment, but on the future side, I've seen they've been building up shorts, and that's how they've been playing this market.
Right, fair enough. Well, that's as far as your outlook on the benchmarks is concerned. A lot of activity considering the institutions, especially on the back of the surge that we saw in HDFC Bank yesterday. But in terms of some other stocks that I want to bring up right now is the list that is seeing a surge in open interest in today's day of trade. And we have Berhampur Chini right at the top with a 21% increase in OI, while its underlying also advances. Longs building up there. And V-Guard Industries continues to show weakness with another decline of around 3%, even as its open interest surges 19%. Just Dial, where we have seen, well, the stock advanced by as much as 1% and 18% increase in OI. CG Power, which was the other weaker counter yesterday, is seeing some amount of recovery in its spot price, and it's 15% increase, so longs building in there. And KPIT Technologies is, well, that's one remains in focus considering the recent strength we've seen in this one, up another 3%. We're not seeing too much unwinding, maybe just a handful of stocks. So we do have something like an Adani Ports, Oil India, and LIC Housing. But yeah, that's what we're tracking. And today's day of trade is only going to be about new positions, considering we are looking at a new expiry going in.
That's right, Agam. We'll see how those positions pan out, and we'll also get some views going in from our experts. But before we get our guest on the show, here's a reminder for you all. If you have any queries in the futures and options market, you can call us now on 022-4540-4141. You can write to us on Twitter, Facebook, and for the ones who are watching our show on YouTube, you can write your queries on that platform. Also, just don't forget to add the AskPQ hashtag. Let's welcome our F&O experts then, Navneet Daga of IIFL Wealth and Thakkar of Anand Rathi are here with us. Good morning to both of you gentlemen. Jay, let me come to you first. How are you viewing the trade on day one of the new series, where yesterday the expiry was led by majorly the short covering rally that one saw for both Nifty, Bank Nifty. What's the sort of range that you'll be monitoring for the June series, and are you taking any fresh trade today?
Hi, good morning to you, Navneet. Absolutely, we have seen a good expiry in last trading session. I would say that good amount of short covering that was witnessed. In fact, I would say that just in 5 to 6 minutes, Navneet, we saw 80 point spike coming in Nifty, whereas almost 350 point spike coming in the Bank Nifty, wherein we saw that there was a major short covering happening in the by the call writers as well, because about 10,700, I think, there was wherein we had seen a good amount of OI build up, at least for the series. Around 39 to 40 lakh shares were there as per the Wednesday data, and thereafter, they were forced to cover about those levels, and to Bank Nifty about 25,800 zone. Now that has in fact changed the overall trend as of now for the short term. I would say the kind of move which we saw yesterday, I think the index is going towards 10,840 initially, and thereafter 10,910. That's as far as the Nifty is concerned. Bank Nifty, I think, will definitely take off its previous swing highs and make life highs also, because the momentum out there has been absolutely strong. So I'm bullish on both of these. Now, as far as the stocks are concerned, I have two buy recommendations in today's trading session. The first is a buy on Glenmark. One can buy Glenmark for a target of 574. The stock has seen a decent falling wedge pattern. That's a bullish reversal pattern. The indicators on hourly, daily, weekly, all of these 3 degrees are in buy mode, and these bottom levels with a bullish reversal pattern, I think Glenmark is set to rise towards the levels of 574. One can buy this with a stop loss of 525. And a Godrej Industries, I think the kind of breakout which we saw in yesterday's trading session would be a good amount of long build up happening in this stock as well. Godrej Industries is a buy for a target of 620. One can buy this with a stop loss of 580.
Okay, Navneet, good morning to you as well. We do want to address stock futures, but we'll address them a little later on. Can you, for now, only tell us about what your view is when it comes to the Nifty as well as the Nifty Bank, and and how you would play that when it comes to the June expiry?
Well, hi, good morning, Anand. Look, yesterday's move was nothing it's kind of nothing less than what we've seen, a euphoric move that was happening in the last hour of a trade, led by what was happening within the heavyweights private bank, HDFC Bank combined with Kotak Bank. To my understanding, if I look at the rolls data carefully, there has been a massive amount of surge in the Bank Nifty open interest positions. Almost 28 lakh shares got rolled to the next series. Normally, the 6 months average is somewhere near 17 to 18 lakh shares. So there is almost a surge of 40% higher open interest in the compared to the 6 months average. So largely, if I look at this market from a headline index perspective, it's looking absolutely fine. But if I look out down to the broader markets, the mid cap index was down almost 6% for the month. Nifty was almost flat for the month, and Bank Nifty was almost 8% up for the month. So there's a complete divergence of trade which is happening in the market. And as a viewer or as a trader, one has to be very carefully, vigilantly watching on what is happening with the broader markets. So until unless you're trading with the Nifty, Bank Nifty or HDFC sprints, the things looks very fine. But the broader markets, it seems to be a sense of distribution happening and some sort of short being creation from the FI side as well. So I'll be taking a cautious stance on the market. What is happening with the private banks, I'll take that away. But apart from that, it's looking likely that the broader markets are giving it the sense that somewhat distribution is happening on the high side.
Well, point well taken, Navneet. We've actually seen broader markets underperforming yesterday also. While you had Nifty, Bank Nifty moving higher, there was a sharp correction seen with the mid cap as well as small cap index. In fact, in today's session also, it's been a mixed session so far for mid cap as well as the small cap index. But on that note, let's shift our focus to the options corner. Navneet has a bull call spread on Nifty Bank for the day, but before we discuss that, let's see what that exactly means. A bull call spread is employed when one expects a moderate up move in a security. Well, in this strategy, a call option of a certain strike is purchased and a call option of a higher strike is simultaneously sold. Navneet, over to you. Take us through your bull call spread that you have for the day on Nifty Bank.
So look, I basically have Nifty on Bank Nifty. I've got a bull called ratio spread. A ratio spreads are basically whereby you buy an in the money call options or at the money call options, and simultaneously you're looking for an upside to a certain level. So 27,000 is what we are penciling in as a level that is likely to take some kind of resistance in the current week or so. Once the euphoria for the HDFC Bank is one dies down. So to my understanding, the ratio spreads is happening at a 50 points, and if the Bank Nifty expires, the strategy will buy 26,500 call options, which is in the money, and simultaneously sell 27,000 call options, two lots of call option. That is 1:2, and the spread is happening in the range of 50 to 60 points, depending on the entry range. To my understanding, if the Bank Nifty happens to expire anywhere about 26,500, the strategy would be profitable. However, one needs to keep a strict watch on the higher levels at 27,500. That's where the break-even point for the strategy is. So one needs to keep a strict stop-loss level if the futures crosses about 26,700, or if the futures happens to close below 26,500, the fixed loss of 50 points is there in the strategy. So the maximum profit that one can make is 450 points if the Bank Nifty happens to expire 27,000 levels for the 7th of May expiry.
Okay, well, Jay, you have spoken about being positive on the markets. Could you reiterate your strategy or your call on going long on the 10,800 call for now, the levels that you're watching out for, and the reasons behind that as well?
Sure. See, now overall, I would say the bounce which we have seen coming in the last couple of trading sessions on the Nifty, I would say, see, this bounce has seen good amount of volumes, increase in volumes. If you see yesterday's volumes as well, it was there was a great volume happening in yesterday's trading session. I understand that HDFC Bank was one of the contributor to this, but then the recent rise has been quite impulsive. That is a 5-wave rising structure on the hourly charts. Now indicators which were in the sell mode on the daily charts have come into the buy mode, which is another supportive tool for the index to move higher. What I also anticipate is that, along with this kind of an impulsive move, what generally happens is we get the minimum equality target on the upside, and that comes to the levels of almost 10,840 and thereafter 10,910. Now, in achieving these targets, what will happen is Nifty will surpass this crucial, retracement targets on the upside, if at all Nifty has to reverse. If it surpasses those retracement targets, then what ultimately happens is that it increases the probability of previous highs getting taken off, right? So whenever there is a counter trend happening, and if that counter trend overshoots, would lead to a rally, further rally, and if there is a counter trend happening on the lower side, suppose, and if that happens to, if that breaks the crucial resistance levels on the lower side, then that becomes a bad trend. I think the equality target with yesterday's move comes to 10,840 and thereafter 910. Hence, I recommend a buy on a Nifty 10,800 call at a current market price of around 105, targeting around 175 with a stop loss of 70. Ultimately, what will happen is, going forward, once it surpasses those levels of 10,840, it will zoom towards 900 and above, and ultimately take off its previous swing high of 10,930.
So Jay is recommending to buy the 10,800 calls, right? Because he's watching out for that mark of 10,840 on the index on the upside. Well, Jay has already given his stock-specific ideas for the day on individual stock futures for the likes of Glenmark as well as Godrej. He's got a long call on both. But Navneet, coming to you, what are you recommending for the day in terms of individual ideas?
To my understanding, the way I'm looking at the trade, there are a lot of short ideas as well as long ideas in the market, because there's a complete divergence with the way we've spoken about the mid caps and the large caps has been performing. So my first call would be on the bellwether heavyweight in terms of index participation is M&M, that is Mahindra & Mahindra. The stock is under tear in the different category itself. The stock has been outperforming since long. It has taken the kind of upper resistance zone of 890 to 900 zone that has also been taken out. So to my understanding, one can look to still be long on that stock and merit to chase the stock on the higher side as well. The current market price of 915 to 918 range, one can look for an entry range. I'm looking for an upside target of almost as high as somewhere near 2,000 points. and keeping a strict stop loss on the lower side of 880 on Mahindra and Mahindra. The second stock would be on the short call on BEML. There are these are the set of stocks which have been forming lower top, lower bottom formation, and we've seen heavy short rolls happening on these counters. Some of the mid cap counters. One of them is BML. So to my understanding, the chart patterns looking like quite weak, and once it started to trade below 910 level, the stock might see another round of selling happening on the lower side. So my initial targets at 860 with a stop loss of 960 on the high side. One can look for an entry range of 920 to 930 range on the June futures to go short on.
Okay, so those are some of those trading strategies which are coming in from Navneet. Jay has already mentioned that he is long on Glenmark Pharma futures, and he's also long on Godrej futures. So we'll be watching out for some of those stocks as well. So with that, let's take stock of some buzzing trades right now. And we do have a surge in Balrampur Chini. Balrampur Chini has been on the roll over the previous few weeks, and it is also a very volatile stock. So on the upside or the downside, the moves are always sharper than some of the other stocks. It's up as much as 3.7% right now, and its open interest is surging by as much as 21%. Currently at around 75. Early days for the June series. Jay, are you witnessing any trade in Balrampur Chini? Is there more momentum left for the stock to move up?
Well, I can see, Balrampur Chini, in fact, since last couple of months, have seen a massive, I would say, short build-up, and thereafter, we saw crackdown happening in this stock. Now, slowly, we are seeing some, bounce back coming in this stock. That is just mere of, the short covering. We aren't seeing any, fresh long, that sort of a build-up, I would say, which we had seen in past when the sugar stocks, I remember, when they were rising in 2004, right from 2014 and to 2015, and that kind of a move, I think, is missing right now. That kind of a trend is missing. So this is just a contra trend. It is not a positional trend, and I would say is something not that something fresh is beginning, and I am not seeing or anticipating that from the data whatever is available as of now. For the series, I think Balrampur series should be avoided as of now. It's just a short-term trade, and these stocks can, on back of any news, when this kind of a trend overall is missing, because I've been tracking the commodity segment also, commodity segment, especially specifically to equity, I would say, rather maybe the base metals, or I would say the sugar international prices, leafy prices as well. And in 2014, I would just like to take a few more minutes. So the viewers get the advantage of the same, what I'm trying to say. In 2014 to 15, the kind of a rally which we had seen, we anticipated that. In fact, we were the first to call out for a bottom in sugar index and out here, and there would be a huge rally is what we anticipated to happen. So now the international sugar prices are not as of now showing that kind of a trend happening, right? So when that is missing, I would say sugar plays are generally avoidable, and they are non-profitable most of the times. Only in that kind of a trend wherein you get in 2006-7 or maybe 14-15, those are the kind of trends wherein you make money. In this kind of a commodity cycle, as just avoid.
Okay. That's some views coming in on the entire sugar sector from Jay Thakkar. But let's get going and take some viewer queries. On YouTube, Ravi Shankar has written to us. He's asking to check with our experts what to do with this position on Bank Nifty 27,000 call strike. He purchased by paying a premium of 135, and I believe he's making money. If you could just pull up the 27,000 call strike, the premium on that one has gone up by 44 rupees today. So currently at 168. Navneet, should he be booking profits, play safe, or he can trail stop losses here?
So to my understanding, the trend is completely on the higher side. We are seeing that momentum continuation in terms of the heavyweight participation. To my understanding, one can keep on trailing the stop loss on the higher side, and now the stop loss should be placed at somewhere in the range of 110 on the 27,000 call options. To my understanding, the greater chances that this week we move towards that level at 27,000. That's where, in fact, we have discussed the strategy also to being on the ratio will call spread to make money on if we move toward 27,000 levels. So to my understanding, one can keep trail stop losses higher if the trend is higher, and one can keep a stop loss now at 110 levels of 27,000 call options and ride the upward momentum.
All right, well, that's the view coming in. I hope that helps. I'm going to move on and take up some more queries. And the next query comes from, well, Chetan, and he has an interesting one. It's on Pidilite, because Pidilite has been moving about, up and about, and he has bought the 1160 call at 20. His question is, what should he do with his position? Can we take a look at the Pidilite call? Okay, so that's the 1160 call. It's currently trading at 1750. His entry point is 20. Can we also take a look at the futures, the June futures, and see what the June futures of Pidilite Industries are doing right now? Okay, so we do have profit taking coming through. It's down as much as 2.8%. There was a sharp surge not only in the futures and options space, but in the cash markets yesterday as well, and its open interest for now is up as much as 8.4%. Jay, how are you viewing Pidilite right now? What's the call on trade for this one?
Well, see, Agam, what I think is that Pidilite is, further likely to, correct, and I would say that the levels which it can come down to, those levels comes to 1050. We can see that much of pain still coming in Pidilite, and right now I would say that since it is trading near the levels of, say, almost near about those levels, I would say, of say 1050. Right now it's trading at around the levels of, say, 1125. So we can see further 6 to 7% downside from current market price, and which could definitely affect the premium of the call option which he has bought. And further to add on, the more days it takes to correct and thereafter reverse, there would be more further loss of theta. So I would say completely exit from this call option of Pidilite and get into some better trending stock.
Exit from this option position on Pidilite is what Jay is suggesting. Our next query is on Mindtree. Bikash has written to us on YouTube. Thanks, Bikash, for writing to us. He's bought the 1060 call strike by paying a premium of 23 rupees. He wants some advice from our experts here. I think the current premium is somewhere about 21. Okay, 22.7. It's just round about the same. It's out of the money strike considering the underlying is trading at 1023. Navneet, can he hold on to his position? What's the call on Mindtree?
Well, I'll say that one should hold on to this trade. This entire mid-cap IT space has been quite resilient, and even in the falling market, has been a kind of the one trade whereby which is giving it a cushion on the lower side. So, to my understanding, Mindtree also it's just forming a base near the 1000 odd levels. Until unless it doesn't break below that level, one can keep on holding on to this trade, and there's a greater chances that we might see again the run-up started to happen. But however, the stock will face a lot of resistance in the range of 1050 to 1080 on the higher side. So to my understanding, currently in the consolidation range, there are chances that the breakout might happen on the higher side. Only thing that one need to keep and watch on is if the future started to trade below 1000 levels, one should look to exit in this trade.
All right, well, there you have it. Look to exit Mindtree for now. And well, Vandana wants a view on Tata Motors and specifically the 330 call. Let's take a look at this specific call. It's currently trading at 2.4. What are its futures doing? What's Tata Motors doing? Again, Tata Motors has declined over the past couple of days, but if you consider the way it's moved, it's been largely hanging around the mark of 280, 290. But Vandana is looking, I'm assuming, to enter the 330 call, or well, she has already. In that case, it will take another 30 points or 10% from current market levels for Tata Motors to move up to and be in the money. Jev, would you recommend any trade with respect to the Tata Motors 330 call right now, or would you ask her to avoid it?
Avoid it, absolutely. See, Agam, that a day before a weekend you don't have any such kind of a news coming in Tata Motors. The auto sales numbers of JLR, Tata Motors are done, I suppose. I think so. Yeah, we can assume the auto sales number again to come back, but then I don't think that with that we can see a 10% move coming in Tata Motors based on whatever the monthly sales figures have been coming. So if at all thinking from the monthly sales data, if she thought of buying 330 call option as of now, I think avoid. If the sales numbers are expected to be better, then I think 300 call is better compared to 330, because even if there is a 5% move or if there is a 10% move as anticipated by her, then the call option will be in the money, and that would thereafter for the entire series will help her not to lose much on the theta part. If at all there is a 4-5% move only, the gain would not be much, and the option will still not be in the money, and then one has to book it out, and one cannot actually ride the trend for the entire series. Once it becomes in the money, you can actually ride the trend, because it becomes as good as the future. So I think buying Tata Motors 300 call option should will be a better idea than 330.
You know what, because Vandana has not been specific about buying or selling this particular option, can I flip that and ask you, would it be a good idea to sell the 330 Tata Motors call then?
See, selling at the current levels in Tata Motors, I think should not be a bad idea as well if someone wants to do that. Selling 330 call option, because but then day before the event you never know what's likely to happen. Even if there is a 4-5% move, I think buying is better. But then if someone really wants to sell Agam, then the strategy should come into play, not just a naked call option, because there is always an unlimited risk out there, and before the event we will not take a risk, because even there is a 1% chance if that happens, so right, that would be a unlimited risk. But then shorting would be a good idea if someone wants to really play the strategy, because what happens is generally the walls spike up before the event happens, whatever sales figures are going to come before that, and generally at that time I think selling the strangle would be a good idea. So one can sell 330 put option, but call option, but along with that one should also sell the call options, so in order to make or minimize the loss if at all there is a loss. So if someone is selling at 290 approximately 330 call option, then one should sell 250 put options as well on the lower side.
That's the view on Tata Motors. Just also want to highlight Bajaj Auto is also doing pretty well. In fact, that's your top gainer on Nifty. Just to remind our viewers, the numbers, the monthly sales number of May had come in a while back, which was a little bit above what the street was estimating. Very quickly, Navneet, today's 4% move on Bajaj Auto. Would you take any fresh trade here?
It's a difficult trade, because normally we are not seeing this stock sustaining on the higher side. To my understanding, either wait for a 28-20 or levels to enter, look for an entry, or either see a breakout about 2900 zone to on the closing basis to surpass and sustain about that to make a meaningful trade. So to my understanding, it's a complete avoid at the current market price. Look for any downside move for an entry point.
All right, there you have it, guys. Those are some of the views coming in from our experts. So I'm going to thank both Jay as well as Navneet for joining us and giving us their views on the markets, and also taking some of our viewers through their queries. And with that, it's a wrap on this edition of the F&O Show. But lots more lined up, so stay tuned in a Bloomberg Quint.
Sir, please believe me, I am in this business for the last